Subscribe to my channel Report Stock.
How does a global energy giant, a company that's been around for well over a century, keep growing, keep innovating, and navigate this constantly shifting energy world, all while, delivering big returns to shareholders? It's quite the puzzle, isn't it?
It absolutely is. And you could argue it's one of the biggest strategic challenges for any major energy player today,
Yep.
especially with, well, everything happening around energy transition and market swings.
And that's exactly what we're getting into today. Welcome to our deep dive into Chevron's Q2 2025 earnings call. Our mission here to cut through the jargon, the raw numbers,
Right.
and really understand the strategy, the big wins, record-breaking stuff, actually, and yeah, the challenges too. It's a huge company, Chevron. We want to give you the key takeaways from their performance and what they see coming down the road.
And this isn't just guesswork. We're basing this all on their Q2 2025 earnings call highlights. That includes the big strategic announcements, plus some really interesting details from the Q&A they did with their top executives. We've
Yeah.
waded through it all.
Okay, so to really get how they're doing this, you have to start with the foundation, the financials. Let's dig into what those Q2 numbers actually tell us. Reported earnings were $2.5 billion. That's 1.45 cents per share. But, often the adjusted earnings give a clearer picture, right, stripping out the one-offs. And that came in higher at $3.1 billion, or 1.77 per share.
Yeah, and what really jumps out for me there is the cash flow. Cash flow from operations hit $8.3 billion, and that's excluding working capital changes.
Right, so that's the core business cash engine.
Exactly. It shows the real cash being generated by their day-to-day operations. $8.3 billion, that's a really strong number, gives them a lot of flexibility.
And something else caught my eye straight away. Their capital spending, their CapEx, the organic CapEx, so spending on their existing stuff, not buying new companies, was $3.5 billion.
Yeah.
Now, that's actually the lowest it's been in a quarter since 2023. What does that signal to you, especially when they're talking about growth?
Well, it's a pretty powerful signal, actually. It suggests they're getting more efficient with their capital, doing more with less, essentially. It's not just about cutting spending, it's about spending smarter.
Yeah.
Getting more bang for their buck,
Okay.
which is, absolutely critical in a commodity business like energy. So these numbers, they really paint a picture of Chevron's financial health, how they're managing things efficiently, even when the market's unpredictable.
And speaking of doing more, this careful spending isn't actually slowing down their output, is it? It seems like it's actually fueling some really impressive results on the ground. Let's look at production.
Yeah, absolutely.
They hit a quarterly production record, not just in the U.S., but worldwide. For a company this size, that's huge.
It really is. And a lot of that growth came from the Permian Basin. That area alone added over 40,000 barrels per day compared to the last quarter.
Wow.
And looking forward, they're actually saying production growth for the year will likely be near the top end of their guidance, that's 6% to 8%. And get this, that doesn't even include the impact of the Hess merger yet.
That's pretty remarkable. It shows they can consistently deliver on their core business, which is so crucial at their scale.
It speaks volumes about how effective they are operationally, just reliably getting the oil and gas out of the ground.
Okay, so from that core business, they're also looking ahead, diversifying a bit. This brings us to their strategic horizon. They spend about $200 million on inorganic CapEx. So that's money spent buying assets.
Right, acquisitions.
In this case, it was mostly buying up land rich in lithium in Texas and Arkansas. That feels like a significant move for an oil and gas giant.
It really is significant. It's a clear step into the lithium market.
Uh-huh.
A sign they're diversifying, looking beyond just oil and gas,
Yeah.
making a calculated bet on, well, future energy needs.
A hedge, maybe?
Sort of, yeah.
Yeah.
And then, of course, the other huge piece is completing the Hess merger.
Yeah.
That brings in those long-term, low-cost growth options in Guyana.
Right. Everyone's talking about Guyana.
Exactly, one of the hottest new oil areas globally. Plus, it beefs up their shale portfolio significantly.
And here's something really interesting about the Hess deal. They expect to get $1 billion in annual synergies, cost savings and efficiencies from combining
The benefits of merging.
by the end of this year. That's apparently 6 months faster than they originally planned.
That's seriously fast. It suggests their integration planning was really solid. These moves, the lithium, the Hess merger, they really show Chevron thinking ahead, being adaptable. They're shoring up the traditional side, but also making these strategic bets on the future.
And that forward thinking carries over into how they're running the company day to day. Optimizing for the future, you could call it. Big cost reductions, structural changes. They're targeting what, $2 billion to $3 billion in structural cost cuts by the end of 2026?
That's the plan. And they've also bumped up their free cash flow guidance for 2026, up to $12.5 billion now. So yeah, efficiency is clearly a major focus.
It seems like they're really tightening the belt, but in a smart way.
Well, yeah, and Mark Nelson, their vice chairman for strategy, gave some color on this. He talked about their new organizational structure. It's about grouping similar assets together, trying to share best practices faster,
Okay, makes sense.
and standardizing how they do things, using scale and technology better, simplifying processes. The whole goal is better execution on operations, big projects, even things like maintenance turnarounds.
So streamlining a giant, it's impressive they're focusing so hard on that at their size.
Exactly. It shows how a huge company like this tries to stay lean and boost profits long term, making every dollar work harder, essentially. These aren't just small changes for a company like Chevron.
Right. Now, we have to look at the whole picture, though. It's not all smooth sailing. Let's talk about navigating the nuances, some of the headwinds they mentioned. Despite the strong overall performance, their adjusted earnings in Q2 were actually down from Q1 by about $760 million.
Yeah, that was mainly due to lower prices they got for their products, lower realizations, and also higher depreciation costs hitting the books.
And what about things outside their direct control, like currency swings?
That had an impact too. Foreign currency effects actually lowered earnings by nearly $350 million. It just highlights, how exposed a global company like Chevron is to those kinds of fluctuations. It's part of the game.
Definitely. And looking at specific assets, their Bakken shale operations. Despite growing there, they mentioned it's currently negative on free cash flow.
And the reason? High midstream tariffs. Basically, the cost of transporting and processing the oil and gas in that region is eating up the profits right now.
That sounds like a specific headache for them.
It is a definite pain point. And they also acknowledged, challenges with exploration results lately. The last few years haven't quite delivered the big new discoveries they might have hoped for.
Okay.
Plus, while integrating Hess is great strategically, it does mean spending more capital in the near term to get those assets fully integrated and developed. It's a trade-off. Spend now for future benefit.
So it's important to see both sides. Even a company doing well faces these kinds of hurdles and has to make tough choices. It's never just a straight lineup.
Absolutely right. Understanding those challenges gives you a much more realistic picture of how they manage risk and decide where to put their money.
So let's get into some leaders' insights. The Q&A sessions on these calls are always revealing, right? They give you the why behind the numbers. Mark Nelson, for example, talked about spending in the Permian. He said they plan to be at the lower end of their $4.5 to $5 billion range for 2025.
Because of those efficiencies we talked about.
Exactly. That sounds pretty disciplined for such a key growth engine.
It really is. And he also hinted they expect to cut capital spending there even further down the line while actually increasing the free cash flow from the Permian. It shows real confidence in optimizing that basin. They've promised more details at their upcoming Investor Day.
Okay, something to watch for. And Imir Bonner, the CFO, she sounded very confident about hitting their free cash flow targets. That's the $10 billion standalone target, plus the extra $2.5 billion coming from Hess.
Yeah, she expressed high confidence. For the $10 billion, she pointed to their production plans being pretty solid, de-risked, and those cost-cutting programs kicking in.
Okay.
And the $2.5 billion from Hess, that's expected from the synergies, which are happening faster, as we said, and also just the production growth from those assets.
Yeah.
Seems like they feel they're well on track there.
Then there was Michael Wirth, the CEO. He touched on tight oil, like shale. He noted it's now a really big part of their production mix.
A major component.
But the focus, he said, is shifting, moving away from just chasing growth towards generating free cash flow. That feels like a significant strategic shift, doesn't it? Balancing the portfolio to support shareholder returns, not just volume.
It really is a sign of maturity in that part of the business, shifting from aggressive expansion to maximizing profit and returns. And Wirth also gave an update on Venezuela, which is always complicated geopolitically.
Right.
Chevron's been there over 100 years, remarkably. He mentioned the recent changes in U.S. sanctions policy mean they could start shipping some limited amounts of oil to the U.S. again. Good news for Gulf Coast refiners.
Will it move the needle financially for Chevron soon?
He said, probably not materially for Q3 results, but importantly, it will help them start recovering some of the old debt that Venezuela owes Chevron. So progress, albeit slow.
These insights directly from the top really do help connect the dots, don't they? Between the numbers, the strategy, how they tackle these global issues. It's the thinking behind it all.
Absolutely. It shows how they're trying to balance today's returns with positioning themselves for the future. It's a complex balancing act.
And ultimately, all these strategies, all this efficiency, it leads back to one core commitment: shareholders. They returned over $5 billion to shareholders again this quarter. That makes it 13 quarters in a row.
Yeah, that consistency is really key for many investors. It shows a strong focus on delivering value quarter after quarter, even when markets are choppy. Sign of financial strength.
So we've covered a lot of ground here. If we kind of zoom out, what's the big picture from Chevron's Q2 2025? It really looks like a company doing a balancing act. Record production on one side, strategic moves into new areas like lithium on the other, all balanced with really tight cost control and a laser focus on generating free cash flow. They're dealing with global issues from Venezuela to tariffs in North Dakota, but still managing to deliver for shareholders consistently.
It really does make you think, doesn't it? What does it actually take for a company like this, over a century old, to stay relevant, stay profitable, especially now, during this energy transition? They seem to be actively trying to shape their future, not just react, through these acquisitions like Hess, and really optimizing what they already have.
So a final thought for you, our listener. Thinking about Chevron's strategy, the efficiency drive, the move into lithium, the focus shifting from just growth to cash flow. What parts stand out to you as most surprising, or maybe most insightful? And perhaps more broadly, what lessons could other established industries facing their own big shifts learn from how Chevron is trying to navigate its future? Something to think about until our next deep dive.
Subscribe to my channel Report Stock.